Kevin O'Leary says your $5 latte is the reason you're not a millionaire. He's been preaching that for a decade. But as we stand here in 2026, that advice isn't just outdated. It's actually dangerous. If you are still obsessing over saving pennies while the global economy is recoding itself in real time, you aren't being frugal, you're being delusional. In 2026, saving money is a slow-motion car crash. The math doesn't work anymore. While you're skipping your morning coffee to save $20 a week, the hidden tax of the AI-driven labor collapse is eroding your earning potential by thousands. You've been told that a 9-to-5 is the safe investment. That's a lie. Your job is a single, non-diversified asset that your employer can liquidate at the press of a button to fund a cluster of GPU servers. You aren't invested in a career, you're shorting your own future. If you're still broke, it's not because of the coffee. It's because your strategy belongs in 1995. You're trading 40 hours of your life for a currency that is devaluing faster than you can earn it in a job market that is actively trying to delete you. In 2026, the middle class is no longer a destination, it's a trap. It's a squeeze between stagnant real wages and an AI-driven floor that is rising faster than you can climb. Knowing where to deploy your first $100 is infinitely more important than saving it. Wealth in 2026 isn't built by retention, it's built by aggressive, intelligent deployment into leverage. I'm going to show you exactly how to flip $100 into a fortune this year by ignoring everything the experts told you about security. We are entering the era of the sovereign individual, where the only safety net is the one you build yourself. The risky entrepreneurs you were warned about. They are the only ones with a diversified income. The stable employees, they are the ones walking a tightrope without a harness, betting their entire survival on the loyalty of a corporation that doesn't even know their name. Stop betting on your boss, or start betting on the collapse of the system as you know it. If you want to stay safe, close this video and go back to your cubicle. But if you want to survive the 2026 labor collapse, pay very close attention. The game has changed, the rules have been deleted, and the clock is ticking. Kevin O'Leary loves to play the villain, telling you that your daily habits are the reason you're struggling. But here is the brutal truth. Mr. Wonderful is speaking from the perspective of a man with a net worth of over $400 million. When you have $400 million, protecting your capital is a game of defense. But when you're starting with almost nothing, his don't spend advice is a psychological death sentence. It creates a scarcity mindset that keeps you small, terrified, and fundamentally broke. Being cheap is not an investment strategy. It's a survival tactic for people who have given up on growth. If you take that $100 and put it in a jar, or worse, a high-yield savings account, that barely keeps pace with the 2026 sticky inflation, you aren't saving. You are losing. By December 2026, the purchasing power of that $100 will have been devoured by rising insurance premiums, soaring energy costs, and the sheer velocity of a devaluing currency. You're effectively watching your wealth melt in real time, while congratulating yourself on your discipline. The rich do not just save, they multiply. They understand that money is a tool for leverage, not a trophy to be hoarded. Kevin O'Leary didn't get rich by skipping lattes. He got rich by deploying capital into systems that work while he sleeps. By following the scarcity gospel, you are training your brain to look for ways to shrink your life rather than ways to expand your income. You're playing not to lose, while the winners in 2026 are playing to take everything. In this economy, a 9-to-5 job is the ultimate scarcity trap. It gives you just enough to survive, but not enough to deploy. It keeps you in a cycle where you are too tired to build and too scared to quit. By the time you've saved up a significant amount by skipping coffees, the AI agents have already taken over your sector and your cost of living has doubled. The mistake you see in the thumbnail, the mistake that 99% of people are making right now, is believing that financial freedom is a result of subtraction. It's not. It's a result of multiplication. If you have $100, your goal shouldn't be to keep it. Your goal should be to burn it on an asset, a skill, or a tool that gives you a 10 times return on your time. Stop listening to millionaires tell you how to save pennies. Start learning how to deploy dollars like a predator. The reason you are still poor in 2026 isn't a lack of capital. It's a fundamental misunderstanding of what money actually is. Most people see $100 as a unit of consumption, something to be exchanged for a temporary shot of dopamine, or a physical object that validates their status. This is the Gareeb or poor mindset. They take that $100 and buy a pair of mass-produced sneakers or a branded hoodie. The second those shoes touch the pavement, they lose 30% of their value. In 2 years, they are worth $10 at a thrift store. That $100 didn't just leave your pocket, it died. It's a dead end on your balance sheet. The Ameer or rich mindset looks at that same 100 and sees a soldier. Their goal is to send that soldier out into the battlefield of the global economy to bring back prisoners. When a wealthy person spends $100, they aren't buying something, they are deploying into an asset. They spend that money on a subscription to an advanced AI research tool, a targeted data set, or a specialized skill certification that allows them to charge $100 an hour instead of $20. That $100 doesn't wither away in a closet. It pays them back every single month for the rest of their lives. This is the why behind your stagnant bank account. You are currently trapped in a cycle of buying liabilities and calling them necessities. In 2026, the cost of status has never been higher, and the value of status has never been lower. While you are trying to look rich to people who don't care about you, actual wealthy are moving in silence, accumulating invisible leverage. They are buying computing power, they are buying niche domains, and they are buying automated systems. They understand that in a world of 4.5% unemployment and AI-driven displacement, the only thing that matters is cash flow. The biggest mistake you're making right now, the one that keeps you paralyzed, in your 9-to-5 is waiting for enough money to start. You've convinced yourself that you need $10,000 or a venture capital check to build a future. That is a lie designed to keep you compliant. In the 2026 economy, $100 is all you need. We are living in the era of the lean sovereign. With $100, you can secure the infrastructure for a business that reaches 8 billion people. You can buy the API credits to run an autonomous sales agent. You can build a brand that outcompetes legacy corporations. If you are waiting for a perfect time or a big break, you are waiting for a ghost. The break is the $100 currently sitting in your wallet. If you spend it on a sale at the mall, you are voting for your own poverty. If you spend it on an asset that generates even 1 cent of passive income, you have officially exited the rat race. The difference between the person who gets rich in 2026 and the person who gets replaced by a script is simply how they view that $100 bill. One sees a meal, the other sees a machine. Stop being a consumer in a world that is designed to eat you alive. Start being an owner. Start treating your capital with the same brutality that your employer treats your contract. The window of opportunity is closing as AI matures. You don't have 5 years to figure it out. You have right now. You have $100. Most people see this as a dinner for two or a new video game. In the 2026 economy, I see this as the seed capital for your liberation. If you follow the standard financial advisor talk, they'll tell you to wait until you have $10,000 to really invest. They are wrong. By the time you save $10,000, the AI revolution will have already matured, and the gate to entry-level wealth will be locked. You need to deploy now. Here is exactly how we are breaking down your first $100 to build a diversified, high-leverage fortress. The $40 safe base. Institutional stability, we start with $40 into a safe base. In 2026, the S&P 500 and the total stock market aren't just investments. They're your hedge against the collapse of individual companies. As AI-driven automation pushes corporate productivity to record levels with the Fed noting productivity shifts above 2%, you want to own the index, not the individual worker. You are putting $40 into an ETF like VOO, Vanguard S&P 500, or VTI, Vanguard Total Stock Market. Why? These funds give you exposure to the 500 largest, most ruthless corporations on the planet, the ones currently leading the blunt force automation charge. The math. In 2004, VTI returned over 23%. In 2026, while the labor market cools, these tech-heavy indices are the primary beneficiaries of the AI lift. By owning $40 of the entire market, you are ensuring that as corporations replace employees with software, you a shareholder are the one collecting the dividends of that efficiency. The 30 tech offensive, fractional power next. We take $30 and go on the offensive. We aren't looking for stability here. We are looking for vertical integration. In 2026, the power is concentrated in the hands of the enablers, the companies that own the silicon and the energy required to run the world. Using a platform that allows fractional shares, you are splitting this $30 across the magnificent leaders of 2026, NVIDIA, NVDA, Microsoft, MSFT, and Amazon, AMZN. NVIDIA, they control roughly 90% of the data center GPU market. If AI is the new oil, NVIDIA owns the only drills. Microsoft and Amazon, these aren't software companies anymore. They are the world's utility providers. Their cloud infrastructures, Azure and AWS, are the digital soil where every AI agent lives. By owning even a fraction of a share, you are no longer a victim of the tech shift. You are a co-owner of the machines that are taking the jobs. The $30 high-yield asset, the sovereign skill, finally, the most important $30. This is your self-education fund. The best ROI in 2026 isn't found on Wall Street. It's found in your own ability to command the machine. The labor market has bifurcated. There are those who are managed by AI and those who manage AI. Take this $30 and buy a specialized tool or a micro degree in agentic orchestration or advanced data storytelling. The warning, in 2026, being a coder or a writer is a commodity. Being the person who can link 5 AI agents together to solve a complex business problem. That is a $150,000 a year skill. The execution by a month's subscription to an advanced AI research platform or a specialized technical course on Coursera or EDX. The Gareeb mindset waits for a company to train them. The Ameer mindset realizes that their employer is their competitor, and they train themselves to become obsolete proof. This $30 investment in your own skill is the only asset that the 2026 economy cannot inflate away, and no CEO can downsize. The 2026 reality check, if you keep your $100 in a savings account, inflation, and the rising cost of AI-gated services will turn it into $80 by next year. If you buy a liability, it's gone forever. But if you follow this 40/30 blueprint, you are doing something 90. 9% of people are too scared to do. You are building a diversified machine. You have a safe base in the global economy, a stake in the tech giants of the future, and a skill set that makes you the master of the very tools that are threatening your 9 to 5. Stop asking for permission to be wealthy. Start deploying your soldiers today. The 2026 labor collapse is coming. Make sure you're the one holding the keys to the kingdom. In 2026, the economy isn't just tight, it's predatory. The system is designed to identify your insecurities and sell them back to you at a 20% interest rate. If you want to survive the 9 to 5 collapse, you have to stop hemorrhaging capital on assets that are engineered to fail. You've seen the do not buy warning on the thumbnail. Now let's look at the 3 wealth killers. That will leave you bankrupt by 2027 if you don't cut them out immediately. First, fast fashion and hype clothing. In an era of digital identity and AI-driven trends, physical clothes have become the ultimate depreciating liability. When you spend $300 on a pair of hype sneakers or A branded hoodie, you are essentially lighting your money on fire. These items lose 90% of their resale value the moment you walk out of the store. By December 2026, those threads will be out of style and you'll be left with a piece of cotton that could have been 3 shares of Nvidia. Stop dressing like a millionaire when you have the net worth of a student. Second, new cars on debt. This is the interest trap that keeps the middle class in permanent servitude. In 2026, with auto loan defaults hitting record highs and interest rates remaining higher for longer, buying a new car is financial suicide. The second you drive that car off the lot, you lose 20% of the value. But here's the kicker. You're still paying interest on the original price. You are literally paying extra for the privilege of watching your money disappear. If your car payment is more than 10% of your take-home pay, you don't own a car, the bank owns you. Third, get rich quick crypto schemes and meme coins. The gold rush of 2021 is over. In 2026, the market has matured and utility is the only thing that matters. If you are still pouring your hard-earned $100 into coins named after dogs or internet jokes, you aren't investing, you're gambling in a rigged casino. These coins have zero underlying value, zero cash flow, and zero future. They exist solely for exit liquidity, meaning you are the person the rich sell to right before the price hits zero. If you buy these 3 things, you are choosing to stay poor. You are choosing to be a Gareeb who funds the lifestyle of the Ameer. Every dollar you spend on a hype hoodie or a car you can't afford is a dollar you've stolen from your future self. In 2026, discipline is the only real flex. Stop buying things to impress people you don't like with money you don't have. Build the machine first, the toys come later. 1 year from today, the world will look fundamentally different. By late 2026, the great decoupling will be complete. There will be a class of people who use the 2026 labor collapse as a trampoline to build sovereign wealth. And there will be those who spent the year waiting for a return to normal that never came. The people who stayed in the 9-to-5 trap, ignoring the data and clinging to safe advice, will find themselves competing with AI agents for scraps in a cooling job market. But for you, if you followed this blueprint 1 year from now, you won't just have a savings account. You'll have a diversified fortress. You'll have skin in the game with the tech giants, a solid foundation in the total market, and most importantly, a high leverage skill set that makes you the most valuable person in any room. You didn't wait for a miracle. You manufactured one with a single $100 bill. 2026 is going to be the year of the smart investor. It's the year we stop listening to billionaires who have forgotten what it feels like to have nothing. They don't understand the urgency. They don't see the fire at the door. But you do. You know that the only person coming to save you is the person you see in the mirror. Your journey doesn't start when you have more money. It starts today. It starts with the $100 you were going to waste on a liability. Deploy it. Send your soldiers into the field and start building your empire. If you're ready to stop being a line item on a corporate spreadsheet and start being an owner, I want to see it. Comment start below if you are committing to investing your first $100 this month. This is more than a comment. It's a public contract with your future self. Make sure to subscribe for our weekly 2026 wealth updates. We are tracking the data, the AI shifts, and the market moves in real time so you don't get left behind. The clock is ticking. The 9-to-5 is dying. It's time to live. See you in the next one.